Today, Rivian unveiled two new products, the R2, the R3. I'm not familiar with the nomenclature, so excuse me if I make a mistake, but I think what I understand is the company is pivoting away from SUVs and trucks towards compact and crossovers. So they want to not compete in the truck market and the SUV market. They want to compete in the sort of Model 3, Model Y. So this is what they unveiled today. A couple of weeks ago, we did an episode where we discussed that the market has decided that Rivian as a standalone company, or in this form as it is today, should not exist. And you can also infer that from the valuation of the stock, which trades roughly a one-time cash. I mean, when a company trades at its cash balance, that means that the market wants it to liquidate. The market wants it to go away, and not wasting money on whatever they're doing. So I think we're continuing with this thread, and I think it's an interesting case study for investors. The purpose of this podcast series is to give people a sense what it feels like to run a hedge fund, and valuation is a very important metric that plays a role. I want to talk about this. I want to talk about our views on Rivian. I want to talk about our views on companies like Rivian. This is meant to be also a little bit more general. But as large Tesla owners, of course, we are interested in a company like Rivian, which is trying to compete with Tesla. This is Not Even Wrong podcast. It's March 7, 2024. This is Delco. For the day, the fund is up 2%. The market is roughly up 0.5%. Here we are down 2.9%. The market is up 6.9%. We're underperforming by 21.8%. So Rivian unveiled new products. They are pivoting away from making trucks and SUVs towards crossover and compact cars. So what does that mean to pivot? That means that literally the company is changing its business. So what they set out to do initially, I don't know how long ago, but at some point they set out to build a truck and then later on an SUV. That mission has failed. The market has spoken. The market has said that they don't want this company to continue doing this. And I think we're in a sort of creeping transition now. There is, unfortunately, whenever these types of things happen, just basic human instincts such as vanity and ego and status and things along those lines, they play a role. What I mean with that is the best that could happen, sort of in a social way, in an economic way. From an economics perspective, the best that would happen is that Rivian shuts down production of its truck and SUV business and fully invests the available cash that it has. And I don't know the exact numbers in terms of debt and cash and those things, but let's assume there is something that the company has. And even if there isn't, they could raise new money and try to build these products and build the necessary vertical integration that is required to actually successfully launch these products. What do I mean with that? Well, Rivian is up against Tesla and others, but mainly Tesla. And then I would say the main two competitors that Rivian is up against is Tesla and the Chinese competition. I think that's a fair statement. There's obviously other competitors, but in terms of having an innovation stack that is compatible with a wealth-generating long-term products and service strategy, it's so far it's only Tesla and BYD. There are others coming. There are the Koreans that one should take seriously. But for now, let's just, for simplicity, assume that's what Rivian is up against: Tesla and BYD. And just as a tangent here, it is again an assumption that companies cannot rely on subsidies, whether it's subsidies from investors or governments or large corporates like Amazon. It's not a long-term viable strategy. So we put that aside. So the only way you can compete long-term with a company like Tesla and BYD, is to do the same thing like they did, and that is to build an innovation stack that has all the necessary ingredients. We're going to talk about what that actually means. But for now, let's just stay with, you have to have an innovation stack. So you have to solve problems, create new problems, and then solve those, and keep growing your company along those vectors to get to the point where you have products that can be sold at a price which is higher than what they cost to make. Because that means the company is doing something right. So the measuring point by which the market decides whether a company has the right to survive or not. And if you can't do that, you cannot survive. And then it's kind of just a short-term type trading thing where you can buy the stock, short the stock, make a few bucks, lose a few bucks. But this is not a long-term viable strategy to compete and build wealth. So if you want to do that, you have to be able to make a product at a certain cost point and then sell it at a higher price point. The reason people are very happy with Rivian right now might be because the products are good, but mainly it's because the products are sold roughly at half the price that they should be sold. So if you go to Whole Foods and something that you like, which is good, let's say a good, I like Strauss yogurts or heirloom tomatoes or fresh Alaskan king salmon. If they sell this to me at half the price, I'll be super happy. The problem is, of course, if you sell something at half the price, then you can't make money, and it's not long-term viable, and therefore it's just a short-term trade. Whether it's as a consumer taking advantage of this short-term opportunity, or as a company taking advantage of short-term sales, it's the same. In the end, it's the same thing. It just doesn't work. It doesn't compute. So when people say Rivian has brand equity, people love their product, so that's a good starting point. And the company should definitely piggyback on that, on the fact that they have a strong brand. I disagree with that because while maybe they have been able to make a decent product, which in its own is not easy, of course, but to sell it at half the price. There's a lot of companies out there. I call them stock tickers in search of a business. And what that means is companies that have sales but are not able to make money. We have Uber, we have Beyond Meat and Roku and Lyft and Snowflake, and there's a lot of companies that they have sales. They have good products, useful products, but they're not able to make money. Now with Snowflakes, I want to be a bit careful because software is always a tricky one. But even there, it's just suspicious from a perspective. Okay, look, if you sell something at a price that you can't make money, then what exactly are you doing? So we're back, but let's get back to Rivian. So let's try to be objective, right? We don't have an axe to grind with them. I don't know anybody who works there. I don't know the management, so I don't have a problem with them at all. What I do have a problem with is, as a participant in financial markets, is with companies that are, I call them pretend companies or stock tickers in search of businesses, because they tarnish the reputation of financial markets. They make it a lot more difficult for companies with genuine interest to build products and services for the long term to create wealth. They make it harder for them to raise money. So let's look at what Rivian has. Rivian has, and we want to look at it through the lens of the innovation stack. Remember, this is one of our four principal books that we have in our principal stack, and it's called the Innovation Stack by Jim McKelvey, co-founder of Square. The idea of the innovation stack is that you start with solving problems, and then you kind of iterate yourself through this problem stack. You keep solving problems, and by the time you have a viable product or service or both, you are way ahead of competition because you've built that innovation stack that others don't have. In terms of Rivian, let's look at their innovation stack. So what problem have they solved? Have they solved the problem of making a battery at cost with lower capital intensity? I would say no, of course not. I mean, the price points that they are living in right now and the margins, they lose money per car. that's certainly not a proof that they have. And also, by the way, we don't even have to look at their income statement. We can just listen to what they have to say. What is Rivian management saying about building batteries at low cost with high value, low capital intensity? As far as I'm concerned, I've never heard them talk about this. So these batteries are somehow coming from the sky. If you look at Tesla, whether it's Rubelino, whether it's JB Straubel, even Musk, they constantly talk about where they started, how they put laptop batteries together and built a car, and now they have all this 4680 endeavors. And this is a company, Tesla is a battery company, amongst other things. In that sense, every engineer is also part of the production process. Everything is sort of a 360-degree, fully integrated thought process. You don't just come up with a design and then throw it down to the factory floor and tell them to make it. You fully integrate things. You make sure that things don't cost more than they should. You make sure that the quality is as good as possible at the price point that you're trying to reach. So that kind of culture, again, missing at Rivian, not clear. Now, on the software side, they have this reputation of being a software-driven company. I can't vouch for that. I'm not a customer, but in terms of fully integrated software cycle with an operating system that is built on top of the car, that is able to absorb over-the-air updates. I haven't heard neither that they are very good at it nor that they're bad at it. So let's give them a benefit of the doubt. I mean, Tesla doesn't have a monopoly on software-defined cars, and it's possible that Rivian has enough know-how, but more importantly also has built an architecture to actually build a software-defined car, because this is what it's going to take. It's going to take a software-defined car to compete with Tesla and the Chinese. When I look at this situation of Rivian, I just want to make one thing clear, and this is an assumption that could be debatable, but the assumption is that in a couple of years, let's say 3-4 years, the competition will be Tesla and the Chinese. So that will be the main competition. You will have niche products, maybe a Porsche SUV. You will have a very low-priced, whatever type of car. But the main competition will come from China and from Tesla. We can throw in there Koreans. We shouldn't underestimate them. So we could maybe say China/Koreans, but we'll see a similar development like we have in the smartphone market, where we have a large Western player in the name of Apple, and then we have a couple of large Asian players, in particular Xiaomi and Samsung. So similarly, we see the development with luxury EVs. In fact, we are inclined to drop even the nomenclature of EV and just call it a car. That's what the car is going to be, a software-defined electric car. This is what cars are going to be. It's not like, well, there's an EV market, then there's a software-defined EV market, and then there's an ICE market. It's going to be EV. That's what people will, when they buy what we call a car today, that's what they're going to buy. So in that sense, Rivian is going to have to build an innovation stack to be able to compete with that, a software-defined electric car. And like we just said in our very short, but I think pretty comprehensive still analysis in terms of, okay, where do they have the expertise? On the battery side, the software side, the manufacturing side. Those are the sort of the three things. We'd say there's certainly some expertise in manufacturing and design to make a compelling car. There's some expertise on software, but overall there is just not enough of an innovation stack here, so they are not going to be competitive. Now, this is our conclusion, and I think we're in line with the market. What we're saying here, the conclusion is the following: the best path forward for Rivian would be, instead of trying to squeeze this pivot now, squeeze the wrong word, shove it down the throat of investors, it would be actually to recapitalize the company, to change management, and to start from scratch. There's no harm. There's no harm with that. You can start from scratch. You know, people have done it all the time. There's no law against that or anything like that. What we are not fans of, or where we see a problem, is this, you know, this, what's the word, sort of convolution of things. So we have a company which does X, and now they're doing Y, but they're still priced as doing X. The capital is going to be spent on X and Y, even though the only thing that makes the company viable would be Y. So why are you even invested in X? So all these convolutions are going to confuse investors and employees and management. And the only reason why management would not want to recapitalize the company and step down and have new people take over is, of course, all the human stuff, vanity and status and reputation and ego and whatnot. But if we look at the history of companies that have been in the position of Rivian, and I don't want to do this now because I don't have it, but I could just think of, let's say, Uber is a contemporary company that is in a similar position. We did have a change of leadership there. In my opinion, it didn't really work, but nevertheless, at least there was a change of leadership. The same needs to happen here. So you need to have a change of leadership. And because the fish always stinks from the top, right? So the problem with Rivian is the reason they had to pivot is because they did something wrong. And what they did wrong is they could not build a culture of making a viable product. In the end, that's what they haven't been able to do it. So now to give them the benefit of the doubt that they can do it with a different product is a fair thing. You can do that. One shouldn't reason by analogy, neither in the positive nor in the negative. And just because they couldn't do it doesn't mean they won't be able to do it now. But if I had to put the odds, if there was a line in Las Vegas open on the odds that Rivian makes it, I would say they're very low. The reason they're very low is because current management has just no proof points at all, no signals, no nothing to make it clear to investors that they deserve a shot in becoming a true Tesla competitor. And that goes back to the lack of the innovation stack. Now they can build all of this. They can start today and build a car that has all the ingredients that are necessary to build an innovation stack that is competitive with the Tesla innovation stack. What is the Tesla innovation stack? Tesla has for 20 years now been working on battery technology. So that's an innovation stack. Tesla has been for 20 years building a software stack with the operating system. And by the way, there's a fourth thing that I forgot. So there's the software side of things, the car and the whole operating system of the car. And then there's, of course, the full self-drive stack, which is another thing that Tesla has been doing now for almost 10 years. Again, there's no indication at all that Rivian has any kind of innovation stack on that front. So those are, if you take the four innovation stacks that Tesla has, batteries, manufacturing, operating software, and full self-drive software. And by the way, those are, there's a couple of other things, the charging network. I mean, that's the innovation stack in itself. We're taking it for granted. But let's say that's something that's available to Rivian too. They can use the Tesla charging network. So let's say they can take advantage of the innovation stack there. There's other things like selling cars directly online and those types of things which seem
easy, but they're certainly not easy at all. But let's get back to, so we have the innovation, like a company, if Rivian today decided to raise money for a business, that's how we would analyze it. Okay, what are the innovation stacks you're going to build? And what are they worth? And then this is how much money we're going to give you. So this is how we would think about it. And the current business, the legacy businesses, it's almost like it's a burden. It's not even good to have it because you could argue, well, they have brand equity, yeah, but it was very expensive. If you think about it, this company went public at a massive valuation, I think 100 billion. Now it's worth as much as they have on the balance sheet, cash on the balance sheet. So all this money was wasted. It was literally thrown out of the window. There's another famous company, by the way, a stock ticker looking for a business, which is WeWork, and we all know what happened to them. Now, I don't want to put Rivian in the same boat because I think WeWork was actually a fraud. I don't believe that necessarily this is a fraud here, although the lines are a bit blurred because if adults waste this much money in the pursuit of something that has very little probability of success and it's not their money, well, then maybe that is the definition of fraud. Now, let's get back to if we were raising money, if I was an investor giving money to Rivian, I would want this company to give me a line of sight of how they're going to build an innovation stack to compete with Tesla and BYD and a potential third Asian competitor. This is what I would want to see, and I have four vectors here: batteries, manufacturing, operating system for the car, and FSD, or the equivalent. Those are the four vectors that I want to see a clear line of sight of an innovation stack that can be built. And then I would want to know how much money it takes to do that. And then I would fund the company accordingly. It's perfectly possible to do that. In fact, if a company starts from scratch today with the idea of building such an innovation stack, I think the chances of success are relatively high. They're still very small simply because look at how much effort Tesla's putting into the battery stack. Look at how much effort they're putting into manufacturing. Look at how much effort they're putting into software, and in particular FSD. FSD is really, really hard because that's a problem that hasn't been solved yet. It's an engineering problem and it's a science problem. So I would be very careful, but I think that because Tesla has so many years they have so many years under their belt, that there's a good chance they can solve it. I don't think that companies like Comma AI can solve it either, although they are interesting because you have to be fully integrated. The main problem with Rivian is that you're raising money now for a business that is going to compete with at least two competitors which are fully integrated. That's a very, very difficult task to do. The CEO of Rivian said it on the call. He said, unfortunately, we're not competing with Tesla in 2015. We're competing with Tesla in 2024, and that's a whole different ballgame. That's the truth. Now, whether that warrants Rivian to exist or not, that's a different question. I believe that there's a chance. We can take chances. That's what venture capital is all about. But it should not happen with the legacy business attached. Rivian is like a marathon runner now that has a 20-pound knapsack and is supposed to run against the fastest runner in the world. That is very, very difficult to do. They need to shed that knapsack, get rid of it, and capitalize the company based on the vectors of innovation stacks that they realistically can build and that they want to build. This is the problem here too. We don't even know if they want to build those innovation stacks. You can't just fund the company based on design, prototypes, and then hope for the best. You can't also expect prices of your vehicles, cost of your vehicles to come down just because you want it. You know, there's a big difference between what people want and what's actually going to happen. And the difference is, what are you going to do about it? You can't predict the future. It's possible. It applies to individuals as much as to companies. You can't predict it, at least to some extent. But the question you have to ask today is, what are you going to do about it? And the question you're going to ask a company that is raising money or trying to bull for investors, whatever that may be. Maybe in the case of Rivian, you can say they already raised the money. Now what they need is they need to convince existing customers to keep buying their money-losing trucks so at least they can get some cash back to fund this new business. I don't know if that's what but you have to convince somebody today that you're going to succeed in 3 to 4 or 5 years. And the way that somebody who's going to invest in that business is going to gauge that is they're going to ask, what are you going to do about it? What is the innovation stack you're going to build? So to summarize, Rivian is in a pivot. they're going from trucks and SUVs towards compact and crossover. That in itself is a viable strategy. There's nothing wrong with that. However, where we don't see a good sustainable future is that we think the company should be recapitalized, and we would like to see new management because the existing management has not delivered on the original business. Now, the pivot doesn't mean that they're going to succeed. And you can also say, let's say Uber has done this. Some other companies, they just throw shit at the wall, excuse my French. They have some money, they just keep throwing and throwing. Hopefully, something sticks. That's also another very useful strategy in our opinion. If you need to build a business which is based on an innovation stack, which has one fundamental goal, and the fundamental goal is to lower the cost and increase value, because that's the only way you're going to create wealth. That's the only way you're going to be able to compete with, somebody like Tesla or BYD or whoever that may be. It could be also, a third. But the point is you have to have those innovation stacks. And again, the 4 innovation stacks that we're looking for in the software-defined car space, and let's be clear, that's where Rivian is competing, in software-defined cars. So the 4 vectors are battery, manufacturing, operating system for the car, and full self-drive. Thank you.